The market dips and then finds support. Are the bears done? This is Invest with Jacob. Okay, guys, for several days I have been telling you that 58.50 is the key support, and if that breaks, we would likely test the 58.15 to 57.75 area, and that's exactly what we saw as the market broke through 58.50 and made a beeline towards 5800. Then the bulls bounced back up toward 58.50, and now the question is, are the bears done? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before we jump into the chart, we will take a look at the indicator as we do every day. It did not have a great day today as it was a trend day down, and trend days are not great trading days. So let's jump into the chart and take a look. Okay, guys, so as I said, the indicator did not have a great day today. Until the end of the day, if you were still trading, we have a 3 strikes rule in my room and in the training. So if you have the indicator and you haven't watched the training, I highly suggest you do so, as it would save you a lot of money on days like today. So what happens on gap and go days, which is essentially what this is, it starts selling down in the pre-market, which is the blue part of the screen. And so the market's going to look for, the indicator is going to look for places where potentially support can hold and try to bounce back. So these two trades count as one because we entered here and this never really got to our stop, so we were still in the same trade. This was a loser. This was a loser. This trade here was a winner. So we have 2 losers, 1 winner, and then we got one more buy down here that ended up being a loser. Now, after that, we're out. As you can see on the screen, I posted the stop and that we had 3 strikes and we're out, and that's how it works on my trading room and with my trading strategy. We don't get caught up in these. We're going to try to buy every single buy signal when the market is clearly trending to the downside. They gave us 3 opportunities to get a dip. We did not get it. We sit out the rest of the day. We avoid this loss. This was actually a winner. This loss, this loss. And if you did trade all day, this is the caveat to the whole story, is if you did trade all day and took all of these buys, you had a couple winners, mostly losers. But toward the end of the day, if you took this one here at 574.70 or 80 whenever you got in, you could have ridden this all the way up to 578 at the close, of $3.5 move up, which would have wiped out all of this move down. So not a great day for the indicator, not what you want to see, but the reason is it's a gap and go day, and it's trying to find support. And if you apply my trading rules, which, as we talked about, is 3 strikes, you're out, you miss a lot of the nastiness of this move down anyway. So not the best day, but those happen. That is part of trading. Anybody who says that they have anything that wins all the time is lying. We definitely don't. We win more than we lose. We do very well in my room, but yesterday was not one of those days. Now, all that being said, if you've been watching the channel for a while, you know this indicator does do very well. It caught the bottom right here. If we go back to the last few days, it caught the top up here. It caught this bottom here for a huge run up. It caught this bottom here for a huge run up, this sell. So it does very well more often than not. And if you'd like to get it and want to be a part of what happens with this indicator, it is absolutely killing the market overall. You can check out our TradingView indicators. There's a link down in the description that will take you right to this page. If you want to go directly, you can go to membership plans on our website. It's TradingView indicators and courses under there. You can get it for $59 a month, and here's what I'll tell you. If you use it for the 30 days and you don't like it, it's not for you, or it's not doing what I say it does, simply send me an email and say, hey, this wasn't for me. I don't want to continue, and I would like a refund, and I will give you your money back. That's a 30-day money-back guarantee, because day in and day out, this indicator kills. And yes, yesterday was a day that it didn't do as well, but if you've been watching the channel for any amount of time, you know that 1, that's how trading goes, and 2, it has been absolutely crushing the market. So if you want to get this indicator, there's a link down in the description. Check that out. Now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500, and as I've been saying for over a week now, this 58.50 level was super important. If they broke that, it was very likely they were coming down to 58.15 to 58.75 to test support there. They did just that. I drew this box on the chart during my call today, telling my members that this was the likely destination for today. They bounced right out of that and started to climb back higher. So what we need to see now is what type of bounce we get and what type of structure we get. If the bulls are able to hold this low, we would look for them to come up to around 59.10, test this high, pull back off of that, and then break out. And we'd look for that up to about the 60.58 level. We do have to adjust our fibs just a little bit with this pullback. So 60.58 would be our target for the breakout. If they can continue higher, they're going to need to get back through 58.50 to start kind of taking back control of the market. If they push up towards 60.58, we would expect them to follow through with an overall target around 63.28 with a wave 3 target of about 62.40. So we would be looking for a direct breakout here in the upside, as long as the bulls can continue to get back over 58.50, give us a 5-wave structure, and then a pullback and go. Now, if they cannot continue, if the bulls are unable to hold yesterday's low, a break of yesterday's low very likely tests 57.24 and likely breaks it, where we see the market move down, bounce off of this area, and come into 56.10 to 55.60. These are two very, very important areas for the bulls. They will be must-hold levels. If they don't hold here and the bulls are able to take out this B-wave low, that would be a major warning to the market. So now everything is about bounce size and structure off of 5,800. If they're able to get back through 58.50 in a 5-wave move, we would look for them to push up into 5,900 or so, pull back, and then break out from there. If they are not, and they break yesterday's low, 57.24 becomes a major key level, and then 5,600 to 55.60. Over on the NASDAQ. So again, the NASDAQ continues to lead to the downside here. We do have the potential for a bigger 1-2-1-2. I don't love that count. If they aren't able to hold the low from yesterday here, we would look for them to break down into this 19,813 region. I would actually look for that to break, and then I'd look for the 19,500 to 19,200 region as the next support down. In that case, we would be viewing this as a potentially bigger 1-2 setup. And if you're a bear, the NASDAQ is your out in this market. They have been weaker overall. The NASDAQ can break down here pretty quickly. If they break below this low here at 19,833, we can see them break down and test the 19,200 area. And if they get through 19,000, the bulls should take notice of that. That would be a major warning to the bulls that the top is potentially in. Ultimately, they still need to break this A-wave low around 17,600. But the break of 19,000 and this low right here at about 18,600 would be major warnings to the bulls. Now, if you are a bull, the NASDAQ may be your best friend. If it's going to be bullish and they're able to hold yesterday's low for a bigger 1-2 like this, then we would look for the 1, 2, 3, 4, 5 to play out towards 23,000. For that to happen, it's going to probably ride with ES, and it's probably going to outperform quite a bit, as ES has already hit several all-time highs and is just off of its all-time high, whereas the NASDAQ hasn't even gotten back to its all-time high. So if you're looking for the long side, the NASDAQ is likely to outperform strongly, and that's where I'd want to be if I was long, is in the NASDAQ. So this 1-2 setup has to hold for this current that you see on the chart. If it goes deeper and breaks this 19,833 area, then it's a bigger circle 1, circle 2. As of right now, we're not going with that count just yet. But the NASDAQ has an ugly structure. It's not something we're very confident in. And when you're not confident, we stay out until we see a setup. Now, again, if they are able to start to build a 5-wave structure up here, then you can set this low as your stop, take the bullish pattern, and look for the breakout. And like I said, it should outperform strongly. Or if they break down and you're looking for a deeper buy target, you can look at that 19,200 to 500 area for a bounce. And then once you get that, set the low as your stop and look for that breakout target to the upside. So again, we've broken upper support. Now the next levels of support we've been talking about come into play on the NASDAQ, which is that 19,833 area. Through that's 19,200 to 5, and below that can be trouble for the bulls. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to our webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial because I want you to get in there, make sure you love it, and become part of the trading team before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking us out. We also have our annual plans. You can get a discount here and a 7-day free trial on that as well. But more importantly, we have our training material. All the stuff that you see, all the key levels that we know, all of the supports and resistances, you can find them by using these Elliott Wave courses. We have our online beginners course as well as our online advanced course. In our advanced course, we go through a little bit more of the complex patterns like double and triple threes, flats, expanding and contracting diagonals, triangles, just everything that makes the market really hard to to figure out and understand and trade. As you can see on the screen, our traders love the courses. It is helping them understand the market and make money. But if this is too complex or you're just getting started, we also have our Elliott Wave for Beginners online course. This course is helping real traders make real money and finally understand this market in a way that makes sense. It is so confusing when good news makes the market go down and bad news makes the market go up. And that's because the news cycles don't matter. Elliott knew that the news cycles were garbage long ago, and he knew that key levels mattered. He knew that key levels were the advantage that he had over the rest of the market because he knew what happened when they held, and he knew what happened when they broke. And this gives you a trading advantage over everyone else. You can finally make sense of this irrational market. Now, this course is 25 videos where we go through 3 different parts. Your introduction, where we go through your expectations, mindset, and emotion, the KISS method, and why Elliott Wave works. The chart setup and tools, where we go through each tool, why and how we use it. And we go through the Elliott Wave for Beginners course, where we go through each of the waves, how to use them, how to understand them, how to measure them, how to find the key levels, the theory of alternation, the pivot, the corrective depth theory, everything you need to know to make sense of an irrational market. Now, the cool thing about these courses is if you want to get them at a discount, you can get $37 off by getting both of them together in our bundle pack. But if you want to get them for free, you can simply join one of our monthly rooms, as they are included in this price. In our first room, the Invest with Jacob room, we get all of our real-time market updates, all of our buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go through every single chart you can think of, all of the Mag 7, gold, Bitcoin, SPY, everything you want to know, what's going on in the big picture. That midday call is valuable. It is worth the price of admission alone, and we really have a good time on that call. You also get all of the training material you just saw. We trade the SPY and the QQQ, and we swing and day trade, so we do trade quite often in my room. Now, if you're looking for individual stocks, futures trading, income trading, and advanced training, you need to check out PT's Throne Room, because in there, you're going to get those individual stocks. The income trading method that's killing the market, futures trading, and his reduced risk binary method that absolutely kills it. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures that trade that's so unique. It's something you really have to see to understand, which is another reason you get that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. Key takeaways for today. We're watching yesterday's low. If they're able to take that out here in the near future, then we would look to the 57.25 area, and I would expect them to push through there, maybe after a small bounce, ultimately towards 5,600. Now, if they are able to take back 58.50 and give us an impulsive structure, we would look for a direct breakout towards 6,010 to 6,058 and an ultimate target of 6,330 on the SPY. Over on the NASDAQ, we are looking for them to hold yesterday's low. If they cannot hold that low, then we would look to that 19,833 area. If they can't hold that, we're looking to 19,002 to 500. Below that is trouble for the bulls. If they can hold yesterday's low and they give us an impulsive move up, we'd look for a breakout, with our next target being the 22,000 area, and overall a target of 23,000. Guys, that is your market update for today. I'll talk to you tomorrow.